Welcome back to Midcap Radar. Well, we've had 4 listings today, but one particular listing that's been quite weak has been Jaro Institute. Upasna, who's been tracking this particular company, joins in with more details on the company as well as its comparison versus some of its peers.
Well, certainly. Overall, if we see, it's a flat listing. And the stock has fallen nearly over 17%, marking an intraday low of nearly about 732 per share. Now, if we look at the overall IPO size, it's about 450 crore, marking fresh issue of 170 and OFS of 280 crores. Now, if we look at the promoter stake sale, it falls nearly to 57.3% from 78.2%. Now, Sanjay Namdev Salunke is the promoter selling shareholder in this IPO. Now, let us look at the objectives mentioned by the company for this issue. Company says that the proceeds out of 170 fresh issue, out of it 81 crore will be used for marketing and brand building and 45 will be used for the repayment of the outstanding borrowings. In terms of overall industry outlook, if we see, India's online education and higher lifelong learning market is projected to see a strong growth at a CAGR of over 40% from FY24 to FY28. Now, let us understand what does the company exactly do. It was founded in 2009. Jaro Institute is an edtech company specializing in higher education and even executing upscaling programs. It partners with leading universities such as IITs and IIMs to deliver its various offerings. Now, let us look at the key financials of the company. Now, if we look at the revenue growth for FY25, it stands at 27% versus the growth of as high as 63% in FY24. Now, there is such a huge difference in the growth of these two financial years because company has discontinued some of its operations in FY25, which is why the financials stated in FY25 are on standalone basis, while for the other years comparable are on a consolidated basis. Now, if you look at the EBITDA margin, it stands at 33.1% versus 32%, and company's EPS stands at 25.5 versus 18.9%. Now, if we look at only the FY25, since the other years are not comparable much, let us look at the key indicators for this company in FY25. The company's ROE stands at 36%, debt to equity stands at 0.3 times, price to book stands at 10.5 times, price to earnings stands at 34.9 at the listing price, which is now cheaper by almost about 20%, and company's EBITDA margin stands at 33%. Now, if we look at the listed peer space, peer group companies, there are not much. Jaro has a CAGR of 66% versus the other companies, which the CAGR is from 46 to 155%.
Thank you so much, Upasna, for joining us and taking us through what exactly Jaro does. However, it's been a very muted listing, especially for that particular name.